In this quick video, I'm going to show you how you can do a covered call in 6 easy steps in a Robinhood. So without wasting any time, let's get into it. Hello guys, I'm Abhi and welcome to my YouTube channel. If you are new to this channel, please consider subscribing as I make a lot of videos around options and how you can generate consistent monthly income or weekly income using options. Okay, let's get into today's topic. I'm going to break it down in 6 easy steps and I'm going to show this to you in Robinhood app using one of my favorite stocks that I currently own, which is AMD. It is my favorite stocks to do covered call in it. I already own 100 shares of this stock, which you probably know that is the prerequisite when you do a covered call. Covered call is a best strategy when it comes to options beginner, especially because there is very little risk in this strategy, and if you do it correctly, it can help you generate income. Your stocks earn money simply as time passes. It also helps you reduce the cost basis, and it could be a very good exit strategy as well if you want to get out of a stock, right? So let's see how you can execute this in Robinhood. I'm going to break it down in 6 easy steps for you. So step 1 is going to the stock that you want to sell covered call on. So in my case, I'm going to AMD and I already own more than 100 shares of this stock. Now you click trade and then trade options. Now step 2 would be selecting a expiration date. Okay. So ideally for a covered call, it is 30 to 45 days, and that is because that is the ideal time for the theta decay to play its complete role, like the theta curve. If you know that kind of gradually you get more value if you are closer to the expiration, and 30 days between 30 to 45 days is the ideal time for expiration date. So what we are going to do is today is end of August, so I'm going to go and choose, let's say, September 22nd. Okay, and then what you have to do is you have to make sure that you have sell selected here and call. Now step 3 is selecting the strike price. So what you have to do is you have to make sure a strike price you choose which you are comfortable with. There are few conditions that you should be aware of. If you do not want to get rid of your stock, then choose something with a delta which is less than at least less than 30. My cost basis is right now around 112, so I'm going to go and select 112, right? So you can see here that what is the delta here, right? So delta is 0.24. It also says the chances of profit for you. So that means you have 82.5% chance that this this option contract would expire worthless, right? So for me, even if this hits the strike price and I have to get rid of my stocks at 112, I would be okay with that, right? So I'm going to select 112, and for this, if you can see here, I will be receiving $158 as a premium. Okay, so that is your step number 3, which is selecting the strike price. Step 4 would be you enter a limit price. Okay, so the limit price, there is a, you will see two prices, bid and ask. Okay, so bid is the price if you want to get it filled instantly, because that is the bid price, because remember you are getting paid this amount, right? So if the amount is lower, that means it's closer to the bid side, then there is a high chances that it would be filled faster, right? If you put ask price, it may take time for this contract to get executed, because usually people would not want to, whoever is buying this call, they would not want to pay you $166 in this case, which is the ask price. They would be okay for to pay you the bid price, which is $158, right? So for this case, I'm going with the bid price. Okay, so I go with the bid price, and then step 5 is you review the profit and loss. Robinhood app, if you click on this arrow, it basically show you the profit and loss chart, right? So as you can clearly see that your max profit is capped to $158, which is the premium that you're going to receive, right? So that's your max profit. Your max loss, it shows unlimited here. Why is it so? Because if the stocks basically goes beyond 113.58, right? That is the break even price. If it goes beyond that, you have to lose your stock at that price, right? Which could be a good thing if you want to get rid of your stock, right? So it just shows unlimited. That is because you have to sell the 100 share of stock at that strike price. So you have to sell your shares at 112, even though AMD could be trading at more than that price, right? So that is the trade-off that you have to do, and for that you collect the premium. Okay, so that is the profit and loss. So once you are good with the profit and loss, it shows max profit, break even, and max loss, right? Once you are good with that, then you click on review. That is your last step. You review and then submit. You review all the details. You check the limit price. You see number of contracts, your minimum credit, your collateral. Collateral is your 100 shares of AMD shares. And once you are good with that, you swipe to submit, and that's it. Okay, guys, so that was it. That's how easy it is in executing covered call in Robinhood. I'm soon planning to bring a Robinhood series, which is like a dedicated a series of videos to execute the complete options strategies, cash secured puts, spreads, calendar spreads, and a lot of other things, right? All doing how easily you can do it in Robinhood. So if you're interested in that, then please consider subscribing, as it's gonna be a wonderful series that I'm planning to bring in. Happy investing, guys, and I'll talk to you in my next video. Bye bye.